Welcome to the LiveSquawk podcast, where professional traders, investors, and market insiders get the unfiltered insights that matter most. Stay ahead of the curve with expert interviews and exclusive market commentary.
Hello and welcome to LiveSquawk's Market Talk weekly review. This is on Friday, 16th of January, 2026. For anyone new to this podcast, every week myself and guests break down the key stories of the week and look at the implications for the markets. We'll also preview the week ahead, providing you a heads up to what you should be looking out for. Today, I'm joined by Nussbaumer, founder and CEO of MacroBeat, FX macro trader, researcher and FX tutor. And he market professional for nearly 40 years as well, by the way, just to throw that in. Before I bring in Beat, just a quick disclaimer. The content provided on this channel is for informational and educational purposes only. We're not licensed financial advisors, and none of the information shared should be considered as financial investment or trading advice. Please conduct your own research, consider your financial objectives, and consult a qualified financial professional before making any investment decisions. Investing and trading in financial markets carries risks, and past performance is not indicative of future results. We're not responsible for any losses or gains that may result from following the content on this channel. Okay. So with that out of the way, happy Friday, Beat. How you doing?
Yes, hi Harry. Thanks for having me. Yeah, not too bad, thanks. It's been felt like another long week. Already feels like the year is like very old, even though it's just only 2 weeks old. But yeah, not all fine over here. Thank you.
No, brilliant. Right, well, let's crack on then. We'll look at what's happened in the past week. There's been a fair amount of data. It was relatively quiet in some instances on the macro front and fundamental front, but as we'll discuss, there's plenty that's gone on. We were headlined, I guess, this week by US December CPI, which saw another soft print. I think 2.7% year over year for the headline. What did you make of what you saw?
To be honest, we kind of expected a little bit of a gift back after the data the month earlier was a little bit, how shall we say, didn't look that accurate from distance. And from what I sort of picked up after this set of numbers, there's still some curiosity out there about the overall quality of the data. It just, the funniest thing right now is, and I see there on your list about CPI retail sales, we had a sort of set of numbers the week before we had ISM. It just, if I may sort of sum up in one word, we have seen channel okay data out of the US. We can add the non-farm payroll as well. And it just sort of seems that, the US is doing actually quite well. To the point that people start to talk about, all the Fed speakers we had in recent days, they're all starting to talk about the pause. And there are some banks, like we know which ones, already started to change their rate call for 2026. I think it was JP Morgan going for no cut at all. And I think this is actually what I start to think is starting to do the rounds a little bit, that actually, you know what, things look actually okay at this point. Now, the interesting part is we had a bit of a mild dollar bounce because also from a positioning, the market is overall still pretty short from 2025. But you can tell the market is not embracing the dollar. So all we get is this dollar bounces with short covering, but no one is going to go, or no one is going that, oh, yeah, the US economy looks just fine. The weakness seems to be behind us almost. Jobs are not cratering. Is the Fed really still going to cut rates or not? And so there is this debate starting, and the only thing on that front why the market is not going mental yet, I guess, is because we know we have a new chair coming in that obviously is going to be a tough because it's going to be hired from Trump. So there's a very, very strange situation out there in a sense that all the reaction about the data hasn't really happened. Some mild 1 hour, reaction, but there's no bigger reaction to all the data we have seen, be it the last week, be it this week, which is quite surprising a little bit.
Yeah, I mean, we'll come on to the reasons why we think that might be the case. Just to really clear this up. So what we had from the annual read was a 2.7% headline print, but 2.6% year over year for the core prices, a tenth softer than forecast, and in line with last month. But it did mark its slowest annual core rate since 2021, and it was really about the core that was the everyone sort of took from the report. Shelter was the main driver. Core services momentum was on the rise as well, and I don't think there was any realistic hope that we would see a cut in January when they meet this month. And we've seen banks reposition themselves, as you said, to some that look for no cuts, others that push their rate cut forecasts further into the future for this year at least. Anyway, so yeah, I mean, the resilient consumer was reflected in what we saw from retail sales data out this week as well, which surprised them and beat estimates. So as you say, the US household looks currently in a fairly well set up position. But labour market, again, on the slower side, but nothing alarming, nothing at a rate that would make you or make Fed officials really sit up and look. Well, I don't know whether we should go on to finish the data first, but I guess really the reason we've had limited reaction in one sense has been the political side of things. And you touched on this before we actually came on air. And noted that everyone's on tenterhooks really about the politics. Obviously, it's been 5 days since we had the US administration suing the Fed chair, an extraordinary situation that he felt the need to come out and then rebut and basically bring out his own messaging. And then we had that phenomenon where we've had a group of central banks now that have come out and backed the independence of central banks generally, but as you know, obviously sitting behind Chairman Fed Chair Powell and his central bank. How did you view that? I mean, you've been around the markets as I have for a long time, and we're hitting new ground every single month, it would seem.
I mean, to be honest, I think, you know, as we briefly discussed before we come on air, it's amazing that we had a brief small reaction of a bit of, you know, the Sell America trade came back for a few hours, but on a very mild form. We had a bit of, you know, the long end bonds were under pressure, the stock market was a bit under pressure, the dollar was a bit under pressure, but all in a very, very mild sense. Now, I think the explanation that this hasn't really caused any bigger problem the way it did in 2025 is probably just that the market is, I don't want to use the word immune to Trump, but it's kind of, the markets kind of started to learn how this is all happening, that at the end it's like a lot of smoke, a lot of headlines, but nothing really happening. And I think it's almost that, which is a very dangerous strategy, to keep ignoring very severe and bad situations where the market just is unwilling to actually hedge any sort of bad outcome, just in the view that, you know, yeah, it's Trump, you know, like these kind of, oh yeah, it's just
Trump. I'll go one further and just, you know, I would say, and this is I'm sort of mimicking what others have said, that maybe a reason for this is that nothing in the story has materially changed since the video dropped on Sunday. There's an argument for that, I guess, isn't there?
Yeah, to be honest, I think the market is in a very sort of strange situation. As I told you before, I feel the sort of same thing. Usually, every year, or most time in my 40 years, you sort of start thinking about the new year, November, December, and you have your views and your plans and your strategies and how you go about. And so this year, or this change of year 25-26 was very surreal in a way that, firstly, I don't actually have any sort of very big ideas. I see all the moving parts, but it's very hard to see the outcome. You already mentioned it briefly about the political angle. I mean, I'm watching the news, you know, your stuff every morning, and I have to say, if I look at the headlines, they're like 75% political headlines versus 25% macro headlines. So that's exactly the problem the market has. You know, we can trade macro, we can analyze macro, we can be right, wrong, whatever. But what is very hard is to analyze politics. And in this sense, when we talk about the US right now, you can't actually even assess that because you just don't know. because there are unprecedented things happening in the US, be it Venezuela, be it whatever else is coming, Greenland, this or that, that you really just sit there and you just look at it and you go like, what, right? It's, you just don't know what's next. And this creates, I think it was someone from PIMCO, which mentioned this week, I think it was a story in EFT, which is something I agree strongly with it. I think while everyone is obviously having to do business with the US on a commercial level, I think on the investment side, I still think there's hesitation with this Trump regime right now. I do think that is probably the reason that the dollar hasn't reacted stronger to actually, if you look at the data price index, I didn't look at it recently, but I don't even need to look at it to know that if you were to look at the data, US data price index, it's for sure pointing up north, because we had stronger data almost on most of the data, PMI, ISM, you name it. We had, not massive, not smoking gun stuff, but just on the balance, better data. So reality is, if you think about a market that is core short dollars from last year, if you think that the US data start to surprise on the upside, that would usually be a very easy target to get a bigger squeeze in Q1 in the dollar. Right. We seem not to get it. Why? Because the market doesn't want to buy dollars. And the reason the market doesn't buy dollars has to do with Trump and with what's happening in the US, which is, again, as I said, very hard to assess what is actually happening in the US, other than it seems the goalposts seem to shift whenever Mr. Trump wants to shift them. And that is a very difficult situation to be in. And that is my only explanation. Early in the year, I thought like the market is either ignorant or complacent, like ignoring some of the risks. In the meantime, I think like the market just doesn't know. It's this kind of lack of knowing of what is to come that is the next story. And I think until we haven't figured out the US and the dollar, it's always very hard to go into the year with like all these big views and so on and so forth. And obviously we have the yen side, which is another, total different kettle of fish right now with the election in Japan coming up and the yen weakness and the sort of strong rhetoric from the MOF in the last few days. But generally, I just sense there's this kind of, again, maybe I'm wrong, but it feels like the market is not knowing. Even those people that usually know seem to be just a bit confused. A
bit unnerved, shall we say?
Yeah. It really feels that way.
We'll come back onto the yen side of things with the BOJ, well, not BOJ, but the Japan government. For anyone who missed it, Takeichi there is called in the election. Is there any dates that we have, or any kind of dates that we're likely to hear from in terms of when that election is going to be?
To be honest, I heard about, there was talk about mid-February, 13th, 14th, 15th of February, maybe Valentine's Day or something, a little present. But that's just, I don't think that is official, just the sort of dates that were flirting about when the news first broke that she may dissolve Parliament. I don't think there's an official time. I don't think it's going to be too. I don't think it's going to be too long. So mid-February probably makes sense, because I think all she's trying to do is just to cement her mandate, and so
she's popular at the moment, so she wants to basically take advantage of that by calling elections now.
To be honest, a bit of a risky strategy, especially that the Komeito, one party that used to be in coalition with the LDP in the past, is now going together with another party, create a new party. So hopefully she didn't sort of miscalculate there, but that's definitely the aim. I think her rating is pretty good, and I think the LDP has really struggled of late, and she probably tries to use that momentum to just try to set the base a little bit better for the LDP and get her mandate. One thing I still don't quite understand is everything I've seen on the budget. Of course, you can argue Japan is a bit of a fiscal issue. It would be wrong not to agree on that. But nothing in the budget. So I didn't think she's reckless. And so the market, I'm not sure why the market has reacted so poorly all the time to that. They really feel we're going to get another Ivanomics or something, which I think is not totally correct. But, right now the yen has been under severe pressure. So much so that the MOF really had to come out. And I would say we've been amber the last few weeks, and I think this week we have switched to not red yet, but we moved closer to red, as in intervention rhetoric from the MOF. Let's put it this way.
Right, we have to turn to the UK. We have to turn to the UK because, again, politics has been at the forefront as ever. Another U-turn from the Labour government. We're not a political podcast. We're not going to get into that in too much detail. But we did see UK November GDP data, monthly data, and it was a rare ray of sunshine for the Labour government, really, in that it came in on the better side, 0.3% growth rate. Seen on the monthly read for November from I think 0.1% expected. We'd seen some negative prints of late on the monthly print. We saw 0.1% underlying 3-month from 3-month growth rate, really, which we have to take in context, and you have to say a bit of a surprise. It was a surprise against forecasts, but do you see any green shoots from the UK economy, or was this an anomaly? I know that we saw manufacturing, for those who didn't know, a cyber attack back in, I think, end of September, October time, knocked out one of the UK's largest manufacturers, Land Rover, Jaguar Land Rover. And it was amazing that it took so much, it chipped away from GDP.
Yeah.
You expected a bounce back to come in October. We didn't really see it from the resolution to the cyber attack and getting everything back online. We had to wait really an extra month. Now that manufacturing has come back online completely. That was reflected in November manufacturing data, but we're still looking fairly tepid really on the whole for the UK economy. How did you view the data, and how does it affect your positioning? Sterling?
To be honest, I continue to run core short sterling positions, but mainly just through a boring long euro sterling, because sterling yen is a bit wild. I'll be on and off short that one. Cable I don't want to sell because I'm bearish a dollar, so I'm more in the boring stuff. To be honest, I actually thought like, oh, great, we have a bit of better data. Maybe sterling gets bought, so I find some better levels to sell sterling. And the story was over pretty quickly. Whether this Yenrik story came to it, or if people just didn't bother. The thing that I would say, which is always tricky with GDP data, it is, as we know, a little bit of a rear view mirror data. And if I look at the sentiment in the UK, and maybe that is a problem when you sit in the UK right now, is that it's just very, very hard to be positive. I think the budget was a disaster. I really do. If just half the stories you hear, whether on hospitality or other areas of the economy, if just half of it is true, then the damage this chancellor is doing to the real economy is just going to be severe. That is always hard to measure versus GDP and foreign investment and blah 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 blah.
Mm-hmm.
But if you talk about the people of the UK, I'm really really worried that we're just creating accidents by taxing the producers and give it to the non-producers, and that you just, like I said, we talked before once about you just can't tax yourself to grow. And so this is still my biggest worry. I wouldn't mind things to that we had more positive things to say, but a lot of those tax hikes are just about to hit. So it hits, I think, now in the new year, the hospitality side. There's more of these tax increasing hitting in April. So a lot of the budget, or the negative side of the budget, hasn't even hit yet. The affordable, let's say the price crisis is still here, even though CPI is maybe correcting, but general price increases continue. So people really struggling. So disposable income is just less and less. So I just wonder how this should all work out. So I've, until proven different, I remain very negative for the UK. And to be honest, you live in the UK yourself, 0.3 or 0.1 really doesn't feel any different on a day-to-day basis. And so I think actually, and the market seems to have just looked through as well, didn't really care. The only thing sterling had a little bit of a bounce in this year so far is because we, after the budget, the market was more worried about the trust moment. We didn't get the trust moment, so actually the bounce was more about, a relief rather than the market actually congratulating the budget. Sterling is still, in some pairs, still a higher yielding currency. So if you short sterling versus few things, it's just too expensive if the story is not live. And so I think sterling really just only survived by default. But you give it just one story again and it's going to sell off again. I just think the UK, I don't want to use Jenrik's words from yesterday about it's broken. But
you're going to.
Yeah, no, I just think, to be honest, yesterday hit home with a few people. And I think to have a politician that actually is sorry about mistakes is something new, refreshing. And it's shocking to know that even in the Tory party now, people still don't realize those mistakes. And that is worrying. So, I'm not political in a sense because I'm not allowed to vote anyway. I'm a foreigner here in this country. Yeah, no, I think there's a lot of things have gone horribly wrong. And I just think they don't change by automatically. I think the current path is wrong. The policies are wrong. The chancellor is wrong, and so I just can't see a green shoot, to be honest.
Okay. And on that note, we'll move on. Yeah. We also saw China December trade balance data. We saw a pickup in imports and exports, but maybe a better sign for the global economy on demand side that we are seeing a pickup in trade balance, China's export data. So we'll keep an eye out for that one. French budget, what next? Again, it's like a horrible nightmare. This is coming back to haunt us, and again, it's another political story, really. But on a fiscal measure, and so it matters for the eurozone situation, or is it also normalised now? Are we now in this sort of cycle where even stories like the French budget, second largest economy in the euro area, doesn't really stir the markets enough to worry about?
Yeah, to be honest, it's another story which I've been watching for a while, at back end of last year as well, when we had all this political drama about the leadership. I keep a constant eye on Bund ORT spreads and can't believe where we are, that it seems to bother just about nobody. And so all I'm trying to do is, I know it's a topic, I know it's talked about, I know, the government just survived another 2 no confidence votes this week. So all I just try to do is I just watch the bond spreads, and will only really start watching it if I start to see bond spreads starting to move, because I totally agree with you. It should be a story. And I remember we have always been saying over the years that if, Italy is one thing and Greece is one thing, whatever, but, if the next shoe to drop would be France, that is a real problem for the EU. And now here we are, and no one is watching. So I'm amazed, and so I try not to watch it too strongly, and I just observe the market to see when, because right now, as we discussed before, the market is ignoring so many things that if you were to react to everything we hear and see and think, you would be quite busy, because all the market is doing is like flip-flopping everywhere. And so I think it's really almost better to be reactive than proactive. Usually as traders, we tend to be early, we tend to price in stuff. But right now, you don't get really the benefit of that. So it's almost better to be late right now and react. And I think this is sort of my early 2026 strategy. There's a few core risks and few core ideas. But as a broader view, I feel I do a lot better, or I feel a lot better about being reactive, see when the story really matters, because there's so much stuff to watch that it's better maybe to just watch until the market cares about it as well. Because if you care too early, you might just be washed out by the time anyone else cares. And French budget is just so far down right now on list of worries. We have like all these geopolitical stuff going on. We nearly had an attack in Iran this week, which we may still get, who knows. So there's some big stuff out there going on, which seems to hold the people like in suspense in a way.
Yeah, I mean, just a quick note on this. Government is likely to make fresh proposals on its 2026 budget after it stopped a parliamentary debate that would have failed anyway. Apparently, Budget Minister Amélie de Montchalin, I probably said that wrong, said the changes would in some way amount to a new text that government will pass using constitutional tools to avoid a vote. So maybe, within that was a Bloomberg piece, but within that, there's reason why the markets didn't react in such a way. It's become a bit sanguine to it. Moving on then to the week ahead, as we kind of come to the end of the episode, you got the second reading of US GDP due for Q3. That is really looking in the back window, and obviously with the government shutdown and everything that we've seen there, it's going to be distorted and therefore not a clean look at it, but it will get eyes on it. We got a load of UK data. We got UK CPI, the labour force survey, and retail sales data out next week. That will be, I guess, pivotal in just the market's view of where we're at for the UK economy right now. On this inflation front, I know that there are, we got a 5-4 vote in favour of cutting rates in December from the MPC. But no one's expecting a further rate cut now until we get the next set of forecasts from the government, maybe even after that. So at least a quarterly, if not maybe a longer time span between rate moves. But they are still looking at rate cuts, I guess, from the Bank of England. How are you? I mean, we talked about the sterling and the UK economy going into next week. Any views on how you trade this, how you look at this at the moment?
Yeah, to be honest, I think my view about the UK is so sort of
is it tainting your trade? Does your political view, and I know we've talked about this before, and you're very down on the UK economy as a whole at the moment and the UK administration. I'm less so. I just think you have to take it in the round and you look at where we're at globally, and you could be living elsewhere and have it much worse. Where are you at looking at the data then? Are you tainted whenever data comes out with the way you feel?
Yes.
As a trader, and is that good or bad? Is that a bad way to be?
Well, to be honest, generally I would agree with you that it's not, but actually I have to maybe make a small correction. My view about the UK is not political. It's actually economic. I think so. While I complain about the government and so on and so forth, I think the real key problem for me is a very weak chancellor with wrong decisions, with wrong focus, and so my bearishness is really an economic one, that I just disregard the stronger numbers at time. And if you look at sterling, like again, euro sterling is the easier one, because if you look at cable, obviously we have the dollar weakness, so you can't really look at cable. That would be sort of the wrong picture. I think you have to look at a more neutral sterling, which is euro sterling is probably the most neutral one of all. Sterling yen, you have like this big yen weakness. So you really have to be careful where you watch sterling to try to get a real feel for sterling. And euro sterling is probably about as clean as it gets to try to see where we at. And I think the data of late seems the market has watched more or less sort of disregarding stronger data, or use stronger data to get a small bounce in sterling to sell more sterling. And sterling drops very quickly if we get when we at the lower CPI, or when we at the dovish BOE or whatever. So the downside seems to be quite fast, even though right now we seem to go nowhere. But I just don't think there's like the market is willing to embrace the UK. I really don't. I think people all see the problem. People are nervous about a chancellor that just tells us she's not going to come back for more, and then she's coming back for more. If her fiscal room is again a little bit tighter, she will come back for more again. So I think there's just a little bit of a lack of trust out there which is almost going back to what I said. The market probably is more reactive than preemptive in a way that they say, you know what, we think she's doing the wrong thing, but let's see. And if the data suddenly were to get better, okay, then maybe there's suddenly this kind of view change coming. But it feels like it's really engraved a little bit into the market that the UK is just having trouble.
Well, maybe that's where the opportunity lies then. Maybe if it does surprise and you know, there's nothing to say it won't. Well, nothing to say it won't really in any.
To be honest, I mean, you know, at the end of the day, I'm a trader. I have a view, I have a position. That position worked quite well in 2025. I don't yet know if it works in 2026. But I'm also not ignorant. So if the data suddenly starts to change, it doesn't mean I end up long sterling, but I will probably end up not short sterling. So, you know, there we still traders to react to what trends we start to see. But right now, I just don't see that anything is materially going to change that would change my view. And data is just a lot of noise right now, which, you know, a bit better, a bit worse. We get unemployment data. We know the ONS has a problem, so we don't even know if that data is actually good or not good or whatever. It's just, it goes back to what we said at the beginning. The market is in a very strange mood, and I don't quite know why this is. Is this because the market realizes that actually what's happening in the grand scheme of things is worrying? I mean, look at gold and silver. We haven't touched on that bit because we usually don't trade it. But, you know, if you look at what happens in the metal market, you really have to wonder why risk hasn't sold off yet. Because if you look at what happens in silver, then the metals are telling us quite the story, which is that fiat debasement is a story. The fiscal worries is a story. And if that's not a story, then geopolitics definitely is. So I think there's this wall of worry that we see expressed in the metal market, which I wonder is also a reason why the market hesitates, because obviously we all are humans and we don't want to sort of talk about really big problems ahead because that's not in our nature. But I think it's exactly that what I feel is paralyzing the market a little bit. Because there's some unprecedented thing. I just say Greenland, right? I mean, let's just think whether the US, I still can't see it, but who knows, the US invading Greenland, right? And calling the sort of end of NATO. I mean, there's just some big things happening. And what worries me, if we just touch just briefly on politics again, because, you know, I don't usually like to talk politics, but it is really important right now for markets. This whole discussion about the hemisphere that suddenly comes into the US, you know, the Western hemisphere, and suddenly Asia talks about their hemisphere. So there's just something very strange going on the bigger picture in politics, which again, I try to find a reason why the market is not moving on stuff that I would expect it to move. And so I try to find an explanation, and the only explanation, which may be wrong, that I have right now is the market is overwhelmed with a lot of that sort of bigger stuff that no one really knows where it's ending or where it's going. Okay. And that's just my take, and that's why my strategy, back to what I said, reactive, not preemptive.
Yeah, fair enough. We're coming to the end of the show, so just to give a few more bits and pieces, we've got Japan's inflation data that's due up next week. Canada's CPI data as well to watch out for. Mainland China GDP Q4 look as well. So again, more data next week. But as you say, it's still really the political framework that we're looking at, the political headlines that will really grab attention of sort of investors, I guess, for the most part in the week ahead. Pete, listen, I'd like to thank you for participating today and your salient points. You can, anyone who's late to the episode, you can find us on Spotify, Amazon Music, amongst other podcast platforms. Pete, thank you again.
Yeah, thank you very much, Harry, for having me. As always, really nice to be here with you.
Fantastic. And we'll get you on again in the near future, and as always. And thank you for listening, guys. And that's where we're going to wrap up the show for this week. And we'll see you again next week. Have a lovely weekend.
Thanks for tuning into the LiveSquawk podcast. Your edge in the market starts here. Subscribe now.